Okay, and we're live. Not that there's much to write home about just now. Bit of a non-event so far. Long and short, for that matter. Couple of losers on here as well. It gives us a bit more something to look at. Morning, Don. Some news at 10 this morning. Hope so, because there's nothing at the moment. 8:30. Well, we might get something in the next 15 seconds. News usually drops between kind of either at the bottom of the hour or the top of the hour, so we'll see. Hey, Alberto. Hey, Black Eagle. Good to see you as well. Let's see what the day has in store. Yesterday was a good day to trade. There was quite a bit of volatility, particularly in the bioscience sector. Today, not so much. Although saying that, Lululemon, I'll steal a joke from the Discord earlier. Lululemon is up to $373, so it's too expensive for me and too expensive for my fiance as well. The pants are too expensive for my fiance, so. And Best Addict, good morning for you. Let's see what happens. Kazu's got earnings later today. Not looking favourable. There's a lot of people saying that Kazu is going to basically tank after earnings, so I don't know. Yesterday we finished. Everybody knows that we finished with just over 2,000 up on the small account, and which is the one account I've got open at the moment, and 15,000 on the main account. It's a good day's trading. They're supposed to release some news data on something at 10 a.m. today. Who is? Who's they? John, let me know. Because right now I'm not seeing anything. It's one of those. It's just very much a kind of. Today is very much like it was last Thursday. it was so quiet last Thursday. I didn't take any trades. A couple of things moved, but there was no good setups. Today's looking very similar. So unless we get something comes out, I could be sat here waffling and, you know, on my soapbox and giving my opinion about nothing at all. So that looks like what it might be today. You tell me, guys, what are you watching? Is it something in mind? Are you looking at AMC again? So, what are your thoughts on the AMC Amazon acquisition rumor? AMC. And if you don't know, I can tell you about it. So, AMC moved up. So, look at AMC on the 15th. So, yesterday afternoon, just after lunch, at 1:30ish, AMC, there was rumors circulated that Jeff Bezos and Amazon were planning on buying out AMC and the cinema chain, etc. And on the back of that rumor, AMC took off and it went from kind of 475 up to kind of 550s. So a couple of the other meme stocks, I call them meme stocks now, but there's a lot of meme stocks, but the ape stocks, a couple of the other meme stocks went with it, like GME, Bed Bath & Beyond, etc. It's trading in sympathy. So the Reddit stocks, I suppose. So that's why AMC moved up yesterday. Now, what do you think? Is that rumor true, or is it just a rumor? Apple were teasing about some info on glass or goggles or something or nothing official. Okay, well, we've seen Google Glass before. That didn't really take off. I remember that would have been 10 years ago now. Google Glass. I was walking around a party with Google Glass on. That never took off. So augmented reality is what we were talking about there, as opposed to virtual reality. Slightly different thing. But yeah, if Apple can do it, that would do wonders for the stock price if they come up with something innovative. Because let's face it, Apple have done nothing innovative for the best part of 10 years. They keep rehashing the same ideas that Android come out with about 18 months later and stick them on the iPhone. Or what they'll do is they'll go back to the previous better version of the iPhone and rehash it as the new all-improved version of the iPhone. I mean, let's face it, Apple have done very little innovation in a long time. But you've got the Apple cult that will buy them no matter what. I mean, don't get me wrong, I think from a tablet point of view, the iPad's probably one of the better tablets out there. You know, you've got a whole bunch of people that say that, oh, I'd rather have my iMac than a laptop. And okay, fair enough, go away. But there's nothing innovative about Apple anymore. Hasn't been for a while. All right, okay, Don, you're talking about economic data. There's nothing significant today in the calendar. There's a little bit of economic data coming out, but nothing significant. Nothing that I can see will really move the needle. That's my opinion. Okay, there you go. Apple goes offensive in Samsung's turf. Let's have a quick look. What's the latest Apple news? Has there even been any? Apple currently trading at 158.70s. Let's have a look at this on the AAPL. There's not a lot of people trading it at the moment. Wait for the market though. Oh, Apple skeptics get a mixed reality is what they're calling it. Okay, so Apple rumors that the reported iPhone 15 Pro low-energy microprocessor allows solid-state buttons and other functions to remain active when powered off, or the battery is dead. Okay. Apple have finally launched, so that was Wednesday today. So yeah, so Apple finally launches the much-awaited Pay Later service. Don't know much about that. No, there's not a lot. Okay, so something glass is afoot. Apple patent suggests striking new iPad design. Now, there's one thing there. Apple's next big thing. Yeah, there's nothing concrete come out yet. Just all kind of conjecture, I guess, with regards to Apple. It's up today. Don't get me wrong. It's up slightly. It's up $1, $1.10. It's up. So we'll see. Hey, Kyle. Yeah, Jason, I had a look at it. You know what? I'm not enamored with it. So let's have a look. I did take a look at this earlier. So Arct, it's just not enough volume for me right now. Arcturus Therapeutics. It is one of the top movers, but it's not moving on great volume. It's relatively low volume at the moment. So, as you know, if you're a regular to this channel, the two things I look for, the two things you really need for successful day trading is volume and volatility. And whilst it's moved up 28% on the day, it went up over 30%. It's not got the volume. Why is it moved up? Well, it reported good or reasonably good earnings, or the market's reacted to the earnings. So they had better than expected EPS results for Q4. That's about it. There's a couple of news articles like Guggenheim and Wainwright's, but they've not increased the outlook or the rating on them. They've just basically maintained the same rating. So I'm not feeling that as something that's to get excited about. Just if you look at it on the 15. You see, it's moved up this morning, moved up after hours yesterday on the earnings, but it's just trending sideways at the moment. Choppy as well. Look at that, very choppy, and on low volume. So what are you going to do? Like I said, Lululemon. When are the best times to trade? UK times. It depends whether you're in what time of year you are, but yeah, best times to trade is subjective. If you're looking for volatility, the best times to trade are between 1 and 2:30. So no, I would say between 2:30 and 3:30. So what you're getting is that first hour of the market open. Pre-market trading is not for everybody. It can be quite volatile, and there's no safety net. So if you're a new trader, I would say be careful of any out of hours trading and size down from what you normally do. And this is another classic case of do as I say, not as I do. I'm well aware of the risks that I take, and I take bigger risks than I know I should, but it works for me. So, my results are not the typical results that you would get from people that are trading the stock market. And certainly, they're not what I would recommend people be as aggressive as I am. I am an aggressive trader, and it works for me. It's not going to work for everybody. So what I would say is the best times to trade the US stock market is from the opening bell, which is 2:30. Sorry, 2:30 UK time. Most of the time, with the exception of 4 weeks of the year when daylight saving brings it forward an hour. But it's 2:30 UK time till say 3:30. Now you can take a look between 12 and 1:30 when you can get a bit of volatility there, and then you've got the power hour, which is the last hour of the market, which is at 8 till 9 o'clock UK time. So if you're a UK trader, you're looking at the markets. The best time to trade is the first hour of the market open. Then it's the last hour of the market power hour, and you can usually get some good reversals. Particularly if a stock's really extended to the upside, and then start to set people taking profits, and you can short it into the close. But you can also get some end of day news catalysts that bring it out. So it's the firstly is the opening hour, then the closing hour, and then kind of just after lunchtime, say 12:30 to 1:30. You tend to get a little bit of spike in volatility there, but it depends. It tends to be news specific. That's why we have stop losses, Kyle. You're stubborn. This is a thing with discipline. So I don't give financial advice because I'm not a financial advisor. I'm just a fat guy on the internet with an opinion. Now, this is my opinion. Do with it what you will. One of, if not the single biggest reason that day traders lose money is ill discipline. And that can be classed as being stubborn. It can be classed as not wanting to be wrong, but ill discipline, not following the rules of your own strategy. Now, one of the things I would suggest here is that you write out what your strategy actually is, and you have a checklist. You have it on your desk next to your workstation. You have it on your desk, a checklist, and you go line by line. Before you enter a trade, you have your trade plan ready. You go line by line on the checklist. Does this meet my strategy? Does this fall into the realms of my trade plan? And then you devise a specific trade plan for the stock. And when it goes against that trade plan, when it breaks, when it reaches your stop loss, you exit, whether it's long or short. And I'm no different to you, Kyle. I'm not saying that it's easy to do, because it's not. I still get it wrong myself. And that's another part of day trading, is you're going to be wrong half the time, and sometimes more. So just remember that being wrong is not a cardinal sin. You just got to accept that you're wrong and move on and be right somewhere else. Holding on to a stock, trading in hopium is almost as bad as trading in opium. You know, it's criminal. So don't trade in hopium. I actually made some good money on Viking yesterday. Got 2K on Viking on the pre-market on the small account, and then almost 2K on the main account later. But I think you was all watching that anyway. So so there you go. Yeah, and we've all done it. We've all done it. We all think we know better than the market, and we don't. Quite frankly, this is a common occurrence for most traders, and this is another reason why we'll lose money. Is that we'll see a pattern forming, we'll get the breakout, and then it'll reverse. And we think, okay, well, it's just a consolidation. You're like, okay, well, it's almost at my stop loss. If it reaches my stop loss, I'll cut it, and then it reaches your stop loss, and you're like, oh, well, there's another consolidation period. There's a support area like 5 cents below that. If it goes below the support area, then I'll cut it. And you know what? There's a whole dollar below the support area. If it goes, and you keep adjusting your trade plan to accommodate the trade, and you end up, before you know it, you've given back 2 days of gains, and that's a common occurrence. The idea is you have a strategy. In line with that strategy, you devise a trade plan for the stock that you're trading, and if it doesn't meet that trade plan, you get out. If it then turns around and then starts to rally, if it's worth trading, not only will it get you to your goal, it will have continuation. And that's what's been missing from a lot of stocks, is the continuation. But those are the stocks that you want. If you're getting an A+ setup, if you miss the beginning of the move, do you know what? You're not going to get the beginning and the end of a move. It's as simple as that. If you get stopped out, it's because you reach the top and it's pulled back. If you get the beginning and the end of the move, it's usually pure luck. Nobody gets the beginning and the end of the move. So you've got to accept that that's the case. So if you get the beginning of the move, or you miss the beginning of the move, and it's genuinely got good momentum, good catalyst, good volume, it's got everything, it genuinely is an A+ setup. If you miss the beginning of the move, you're gonna get continuation. You'll get your goal. You'll get your 10 cents, your 15 cents, your 20 cents, whatever your goal is. You'll get that, and maybe a little bit more besides, before it then starts to consolidate and pull back again. So just be careful. Don't be looking to trade everything. Don't be afraid not to trade. I think that, as somebody that's grafted my whole life, this is one of the big things that I struggled with to start off with. And I still do. I like to be an active trader, which is why swing trading for me, whilst I do it, and I can do it successfully, I feel like, I'm not working, you know? So don't be afraid not to trade. There's a saying in trading that the trade that you don't take can be more profitable than the ones you do. So waiting is an important part of trading. You wait for the right setup. Be patient. Being patient and not trading when the setups just aren't there, that's a skill in itself. Yeah, and don't worry about it. If Viking takes off today, don't worry about it. That was yesterday. Today's a different day. It's day trading, not week trading, not month trading. It's day trading. So what happened yesterday is irrelevant. You might look at yesterday for a catalyst. You might look at yesterday for some kind of key areas in the price action. But today's a different day. The price action is different than what it was yesterday. The people trading it are likely to be different than the ones trading it yesterday. So don't get married to a stock. Don't get hung up on a stock. Don't let the stock don't get a win or a loss get into your head psychologically. If you get a win and start getting cocky and overconfident, the market's going to humble you pretty quick. And if you get a loss and you get fearful and nervous about it, then you're going to miss opportunities. So you start every day brand new, fresh. Easier said than done, I know, but that's what you want to be looking for. Even this hasn't got good volume. It's the top mover right now, and it's not a great volume either. Money's in the waiting, Ed. Absolutely 100% agree with that. Few more days of the small account. So today's day 50 plus 1. And I'm going to withdraw the lot and just leave enough in there to keep it ticking over. I might do for April. I might do one of those funded account programs and see what happens. Yeah, absolutely, Neith. Absolutely. Sometimes the best trade is no trade. Sitting on your hands can be more profitable. So this is JFIN, the Giant Group. Let me have a look at why this is starting to move. We're now getting a bit of volatility on this. $446. So just broke new highs. 449 is the new high. So 450 resistance, $half resistance. All right, that's why it's moving. It's conference call in progress. Decent earnings results. Better than expected sales and EPS earnings up from 36 cents last year to $1.45. Quite substantially. So it's good earnings. That's why it's moving up. It's a key data on this. Looking at 53 million shares outstanding. Negligible short interest. And yeah, it's broke the $0.50. Don't trade the VIX. Don't trade VIX or SPY or any other derivative. That's done. Says a lot when top mover on the day. It's got good relative volume as well, by the way. Like 10x on the relative volume. Well, it's actually more. It's nearly 20x on the relative volume. But it says a lot when the top mover on the day is 30%. Top two movers, and then there's not much else after that. I've even put the losers in there just to give us something to look at. Just one of those days at the moment. There's just nothing really jumping out to say, okay, this is where the opportunity is. No, it's not actually though. It's not, Alistair. So the VIX is the volatility index. It's a fear index. It's not an actual. It doesn't actually have volatility. So this is the VIX, for example, here. So you're looking at an ATR right now on the 1 minute within the VIX of a little over 1 cent. That's not volatile. Okay. It basically measures the volatility of the market. That's what the VIX, they call it the fear index, but that's what they call it. It's usually inverse. When the VIX is down, the markets are usually up and vice versa. But when the markets are particularly volatile, you'll see the VIX rising in price. So it's not something that I would trade. That's the volatility index, yeah. Let's have a look at the market as it stands. So the VIX right now is down 3%. SPY, on the other hand, is up 0.87%. The Russell 0.88%, and the Q's 0.98%. And DIA, Dow Jones Industrial Average, is 0.7%. These are ETFs. So you've got DIA is the Spider Dow Jones Industrial Average, which is an ETF that tracks exactly that. You've got the Spider S&P 500, SPY, which is an ETF that tracks the S&P 500. Go figure. You've got IWM, which is the iShares Russell 2000 Index. It's an ETF that tracks, exactly as you probably guessed by now, the theme happening here, the Russell 2000. And then you've got the Qs, which is the Invesco ETF that tracks the Nasdaq 100. It's mostly tech stocks. So Well, why do you think that was, Alistair? Why do you think that the volatility increased so much 2 weeks ago? I'm not trying to be pretentious here, but let's just look at this on the daily, okay? So look at the VIX on the daily, and we'll go back 2 weeks. So we got some huge volatility on the VIX here. Why do you think that was? So this is on the daily. So this was the 9th of the 3rd, 10th of the 3rd, 11th of the 3rd. What do you think happened between the 9th and the 20th? Does anybody know what happened that made the VIX go so volatile over the last 2 weeks that happened between the 9th of March and the 20th of March? Anybody? Bueller? Anybody? Let me show you what happened, and let's just show the SPY before I show you what happened. So similar situation here between the 9th and the 20th. Volatility on the SPY, not as volatile as the VIX because that's a volatility measure. So what actually happened is the banks crashed. We had, let's just look at some of these banks, okay? Let's look at FRC. We can't look at Silicon Valley because it's defunct. So we'll look at FRC. What happened? So on the 9th, so this is the 9th, we had a big drop pre-market. And then a sell-off. Then on the 10th, a huge sell-off. And then so we got this volatility. Let's look at PacWest. Similar kind of thing. Huge volatility, up from 27 down to 5. That was PacWest. Look at something that's been a little bit more stable in the old banking sector. Charles Schwab, same sort of thing. That's why the VIX went mental. And you know what? I made more money in that period than I have in any 2 week period in my career. And it wasn't trading the VIX. So Fed was hawkish, that killed the banks and sent the VIX high. There was an element to that, but it was mismanagement of the banks which killed the banks. So if you've been listening to the Fed conference yesterday and the SEC and Capitol Hill news conference yesterday, you'll understand that there was clear mismanagement of Silicon Valley and Signature Bank in particular, and of course still trading at the moment, but Silvergate Capital. It comes a lot from being linked to crypto and FTX and the whole crypto bubble bursting, but also in terms of the increase, the Fed being hawkish and increasing the interest rates, where they've invested longer term for the bonds, they're not getting the same yields as the wider commercial market is giving. So they're then trying to sell those bonds to raise liquidity. They get a bank run on them in terms of withdrawing capital, and then it spirals, snowballs and spirals out of control. So whispers get out that this bank doesn't have enough capital to cover its deposits because they've invested in yields, they're not giving market rates. So they try and sell those yields to raise liquidity. They try and get some investors and they're looking to raise liquidity some other way. That sparks a panic. Everybody starts to withdraw the deposits. The bank collapses. That sparks the contagion. So you ended up with SVB, Signature Bank going out of business. Signature Bank is slightly different, but similar reasons, but there's other things that work there as well. Silvergate Capital is in dire straits. Have already announced that they're going to be liquidated and going into liquidation. Then you get all of these other regional banks that are having the same issues. They've invested in longer term bonds that are not giving, because of the Fed's hawkish interest rate hikes, that they're now not giving the level of interest on deposits that other lenders are able to give, and it's a catch-22 situation. So you end up with these banks failing. There's other banks failing for other reasons, like Silvergate Capital, like Credit Suisse, who've just been badly managed for a long time, but the spotlight's on there. So you get this volatility in the banks. It causes this huge volatility on the stock market. And that's why the VIX index went volatile as well. I made a lot more money trading Silicon Valley Bank and Schwab and FRC and Western Alliance than I would have ever made trading the VIX. Just saying. But, you know, you do you. Oh, EBS making a bit of a pop. Morning by the dip. Well, it depends, Invest Addict. So the thing is, usually when I take a loss, I'll take a look at it and I'll analyze it, and then was I wrong and why was I wrong? So I'll come to you in a moment, MT. So for example, okay, a couple of weeks ago I was trading the bank volatility and I kept mistiming it, and I took some big losses, massive losses. I was $70,000 down, which was about 40% of my equity position at the time. And normally I should have walked away well before I was that far in the hole. But the reason I was that far down is because I was mistiming my entries and cutting my losses. Every position that I took, for example, if I took a short position, the stock went it went below. After I got stopped out, the stock then moved below. So I wasn't wrong, and that's what I was looking at. My initial assessment wasn't wrong. I just timed it wrong. If I took a long position, it went higher, but I got stopped out before it went there. So I kind of sat down and reassessed. The volatility was there, and that's what we make, what we take profit from, is the volatility. So it was a case of, okay, just reassess, size down a little bit. Let's get some green on the board, which is what I was able to do. Get a little bit of green on the board, and then start sizing up. Once I was able to get a feel for the timing of the volatility, getting in at the bottom, getting in at the top, getting in, selling at the top, getting out at the bottom, whatever which way I was trading it, and then I was able to turn that 70k down, 70k red into a 43k green day position by trading the volatility in those banks. So if I take a big loss, it's usually either for one of three things: stupidity on my part, just poor timing on the trades, or stubbornness. Now, if it's stubbornness or poor timing on the trades, then I've only got myself to blame. But if it's the volatility and stupidness or stupidity on my part, then I've got to walk away. But if it's just poor timing and stubbornness on the trade, I know that there's enough volatility. I've lost 15k. There's enough volatility in the market for me to make 15k. I've just got to time it right, and I've got to get the right strategy. I've got to get the right breakout, etc., and not be stubborn. And trade to the big thing is to trade to. I've got a defined, proven, profitable strategy that you have to be disciplined to trade. And there's a whole bunch of people live on the stream today that have learned my strategy, that have taken the Day Trade with Tony course, that will agree with me. It is a profitable strategy if you execute it with discipline. If you don't execute it with discipline, or you veer from the strategy, that's on you. But I look at highly volatile days as an opportunity, and if I'm take a loss, sometimes I'll walk away. If it's just not going in my favor, sometimes I'll walk away, and I've got to accept that it's just not my day. Other times I'll recognize that I've made a mistake, and where I've made a mistake, I just need to correct that, but there's enough volatility to make that back. I'm kind of the king of doing red to green moves. I'm kind of king of taking an initial position pre-market. I lose more often than not. I lose pre-market. I'm actually a losing trader pre-market overall. Probably not actually. I'm probably making a small amount pre-market, but I really like to trade pre-market. After the bell, and I lose on Mondays. This year in particular, I lose on Mondays for whatever reason. But I'm not going to stop trading on Mondays, and I'm not going to stop trading on pre-market. I probably should do, based if I'm going to adhere to the statistics. But every day is a different day as well. You've got to recognise the fact, and this is another thing that traders find very difficult, is you've got to recognise the fact that you're going to be wrong. You're going to be wrong a lot of the time. You've got to accept the fact that you can be wrong. A red day is okay to have. There's nothing wrong with having a red day. Just try and keep it small. Okay, so MT, when am I going to restart the small account challenge? So I'm coming up to the end of it. I've done 50 days now. Today's day 51 or 50 plus 1. I'm seeing at the end of this month, we've got kind of a devil horns forming here, so I'm kind of a little bit wary. There's no point me just going back and starting from scratch again on small account challenge. And I need something to motivate me to do that. So I was actually thinking of doing one of these funded trader programs, and one that's probably jumping out at me at the moment is the TradeNet funded trader, because I was promoting them. We did the World Series of Day Trading last October with them, and I was thinking maybe I'll give that a go and see. I've never done a funded trader program, so do that live so people can see it. Is it worth the money? Trading with somebody else, do a challenge, and is it possible to get funded? Somebody who's an experienced, profitable trader, is it possible to get funded with one of these accounts? So maybe I'll do that. No, I'm not saying you're wrong, Alistair. I'm not saying you're wrong. If you like trading the indexes, you can get good leverage, then why not trade the VIX? That's entirely up to you. Like I say, you do you, boo boo. It's not something. I don't trade the SPY. I don't trade. I'm invested in the SPY, and I'm invested in the TQs, but I don't trade them intraday, is what I'm saying. The only reason that they were so volatile is because the market was so volatile last week. Oh, the week before last. Most days, the VIX doesn't do much more than kind of 4 or 5%. Lululemon pulling back a little bit. I was a little bit premature. I was looking for a break of 75 there. But we'll see. 2,500 shares. I want to see this up at $11. Range is increasing as a result of those last few candles. Where is she? I can see her snoring. Oh, there she is. By the door. We're getting a bit of a coiling under the $0.75 level here. Flat top formation. Here's a question, guys. I was looking at the. Obviously, I use Benzinga. I use Dash Trader, although I get that provided by the broker. And I was thinking, if I put a package together for you for some of you guys, where you can get it from me, so you get the full Benzinga Pro package, access to Dash Trader as a simulator, and the Day Trade with Tony course. Would that be something of interest to you? Let me know, and if it is, I'll put a package together. Because what that will do is, let's say over a 3-month period, it gives you the full education, and then you get the ability to scan for the stocks with Benzinga. You get the ability to practice on a live simulator before putting real money on a line, which I always recommend. I've got a bit of a five-minute tweezers up here. I'm still looking at the flat top, so I'm just going to hold this the support at the $0.50 maybe. We'll see. But what I'm saying is let's access to the Day Trade with Tony education course, the day trading education, access to the Discord, obviously, myself as a mentor with that, full subscription for Benzinga. And full subscription for a Dash Trader, the Dash Trader platform from a simulator point of view. So that will be the package, Alberto. That's what I'm thinking. So I was busy talking here instead of getting in for the break of $10, which is what I should have been doing. Busy chatting and venting my spleen for this one. So yeah, I'll look into that. I'll probably put something together over the weekend then, and I'll publish a video or something going through the details over the weekend. And if there's appetite for it, why not? Yeah, so it's a full simulator, real-time, live data, full-time simulator. Yeah, Fuzzy. Full platform. I mean, I'd probably have to negotiate. If I try and get some kind of discount package on Benzinga and Dash Trader or something, and see what happens. How much are we talking about in cost? I don't know, 300 bucks a month or something, off the top of my head. Let's just Benzinga's about face value. Benzinga's about 200 bucks a month. It's about 150 quid for about $150 for Dash Trader. Last time I looked, I'll double check. Might have gone up since the new year. I'll double check. Right, I think it's about 150 bucks for Dash Trader. Might be a bit more. 200 bucks a month for that. That in itself is probably what's that 350 plus the Day Trade with Tony package. So call that another 100 bucks, so 450. So if it's coming in less than 500 bucks a month, then obviously it's you're getting a bargain. But I'll see what I can do. $250 a month for Dash, is it, Fuzzy? Well, there you go. if I have a word with them and see if I can get a discount for on those, because obviously it's going to cost me to put that together, but we'll see. Well, this is what happens when you chase the momentum. I don't rate them. The scanners on Dash Trader, I don't rate them. You're better off with for me. You're better off with the Finviz, the free scanners. I don't rate. Now, I believe, I've never done it myself, but I believe you can actually sync trade ideas into Dash Trader. But that's a separate subscription to trade ideas. That's more expensive than just having Benzinga. Well, this is the second red candle in a row, so if I break new lows here, I'm kind of just, I'll cut it for now. There's not a lot else moving. Giant had earnings, and that's pulling back now quite substantially. Yeah, I think that's the advantage with trade ideas. You can sync it with a lot of different platforms, and that's why a lot of people go with it. I'm just going to get out here. Still got 2,500 in this. Yeah, get out. Yeah, so yeah, I mistimed that. The right time to have got in here was kind of break a $10 tier as it started to make its move up. That's where I should have been getting in. That's just me getting distracted and not paying attention to the trading. But look, it is what it is. But likewise, going back to what I was saying about whoever it was said, how do you recover from taking a hit? So a lot of people, it's all relative as well. It's all about sizing. So someone in the Day Trade with Tony Discord yesterday, I dropped the trade recap for the day, and it was a 15k day on the main account, and they were saying, oh, casually dropped in a 15k day. And it's not that I was casual about it, it's all relative. So the difference between me making 15,000 in profits yesterday and someone making 150 bucks in profits yesterday, the majority of the time is just sizing. So where I'm taking maybe 5,000-10,000 shares, they might be taking 100-150 shares. There's a big difference. There's a huge difference. So likewise, if you've got a $5,000 account and the stock price is $10 a share, I don't care how much, which broker you're with, you're not going to be able to take, 10,000 shares. You just can't, because no broker's going to give you a 20x leverage on something like EBS. They might give you 20x leverage on the indices or on Forex or something like that, but they're not going to give it on an equity. Certainly not something that's up 16% on the day. So it's all relative. I mean, 2.5k. You saw I went 2.5k down yesterday on the live stream and finished. Where did I finish yesterday? Of 7,000 something or other. 7,000 up on the live stream yesterday. So I was halfway there before live on air. Buyer Mayer yesterday was lovely to trade. I've got to be honest. There's not a huge amount. So Giant Group. So we looked at this earlier. As you can see, as this moved up to kind of 450 and then pulled back. This basically moved up during that earnings call. Now it's pulling back. So you never know how the market's going to react towards earnings. So don't try and anticipate the earnings. Unless you're trading options, I would say don't try and anticipate earnings. If you're trading options, then what you want to be doing is maybe look for an option spread or trade an option strategy where you can actually get good value and you not make a huge amount because you can hold on to the losing contracts. If you do a spread or a straddle maybe, then options can be a way of trading earnings successfully. Otherwise, you trade the price action. No, absolutely, Super Chip. Don't take boredom trades. Boredom trades are usually losing trades, so there's no point taking them. Let's look at the market. It's looking quite bullish, actually. The SPY's up significantly above the VWAP. It's testing that 400 level again. So above 405. If the SPY can get above 405, I think that's not a bad result. I think it would signify the end of this banking volatility for sure. I don't understand how Silvergate's still trading. They're supposed to be going into liquidation. Well, there's no range on it. Who was it told me they were going to go up to $3 a couple of days ago? Can't remember. Oh, that's right. So somebody on YouTube put in the comments, Silvergate's going up to $3 this week. I'm like, yeah, no, it's not. I hope it does if you're trading it, but I'm not trading it. There's too many red flags on it. Okay, let's go back to EBS. We might get a continued move back up here. If we can't make a little bit back. We've now got a support area to watch. Also got a resistance area to watch. $77 is the high of the day, but let's put it at 75. Yeah. And again, don't revenge trade, guys. If you take a hit, take the hit. Don't, just because it goes against you and then it starts to move back up like this, don't just jump in big size trying to recoup all your losses in one fell sweep. Work it back, trade it back. Base hits. Otherwise, if you get in and it doesn't go in your favor, you're going to lose even more. Well, this breaks. I don't mind scaling into this position if it breaks new highs. But right now, I just want to see if it. What am I in at? 61. I just want to see if it gets up and tests those highs up there at 75 again. It depends on your moving average. It depends on which moving average you're talking about. I mean, that's the beauty of statistics. You can manipulate statistics in any way you want it to favour you. So if you're saying it's on the moving average, there's a guy on the internet, Calvin something or other, and he's likes to think that he knows what he's talking about. I mean, bless him. He's got his chart with about a dozen different moving averages, and it looks like the ribbons, you know. And he starts talking about moving average crossovers, which, you know, moving average crossovers are a decent indicator of sentiment. What they're not is an entry or exit indicator, because you need to look at more than just the moving average crossovers for that. As that more often than not, you'll get a moving average crossover, the move's already gone. That's a big thing. Yes, there's good news. It's got a good catalyst there, user. I mean, you've got a moving average crossover here, which is the golden cross here. So that would have been the time to get in, which it would have been right. But you've got multiple moving averages. What do you do? You've got so much noise here. What do you do? It's shopping sideways. So you be in and out, and you lose money going in and out all the time there. And right now you'll have got in there, but you'll have still be holding. I like trading the inverse head and shoulders. Inverse head and shoulders it's got about an 83% success rate in terms of probabilities. Inverse head and shoulders is quite good. I like that. Right now, I'm just caught between the spreads. Oh, well, I'm actually above the spreads now. Now I'm caught between the spreads. Yeah, we've only got one shoulder, Kyle. So if it comes back down towards the kind of $0.50, you might be right, but we've only got one shoulder at the minute. I'm wanting to see this break new highs and retest the kind of $11 area. Yeah, we've got the opening bell. I'll switch the scanners over in just a second. Switch the scanners over in a second. We'll see if this breaks the pre-market that pre-market resistance level of 1075. What I will do is give this a 20-cent trail, 20-cent stop whilst I so why is this moving? Okay, so it's moving up because reports in the US Food and Drug Administration have approved the company's naloxone nasal spray for over-the-counter use. Okay, so that's why you put stops in place. Let me, where's my bloody scanner cursor gone? Let's switch the scanners over. I want to get rid of most of the noise here. It's okay. Is it me, or is this just not moving anywhere? Biomedical vomiting. Viking vomiting. These are the movers from yesterday. Overall market vomiting a little bit. Yeah, so nothing moving just yet. There's the vomit. Oh, I'll take my bio break whilst we're waiting for the market to turn around. Okay, nothing moving. I can check Marathon Digital. That was up pre-market, and I can check that for you, no problem at all. So Mara, oh, this is looking nice. Nice moves. Let's see if we can't break these pre-market highs. Pre-market high of 79. $780 and above. We've got a session high of 77, pre-market high of 79. Well, that's Marathon Digital. A lot of selling off though. Genius Group halted. No reason available. We'll have a look at that in a moment. Blue halted. AMC down on the day, but that Amazon rumor didn't not follow through for continuation. Pre-market high is 79, so I'm not going to jump in at 77. I need to see 780. Just session high or high of day right now. 77. EBS vomiting. Double top up there into the open. Why did I not see that? 2-minute double top. So that's a new high of day, but it's not broke the pre-market highs. That's what you really want to be looking at. Amazon. New high for Amazon, which will that cause it? There we go. New high of day. A lot selling off. A hell of a lot selling off. Well, you can see it on the scanners there. It's all red at the moment. All the momentum is to the south side. With the exception of Amazon, moving up. Let's take a look at Amazon right now. Yeah, Amazon breaking highs. Testing the $100 level. The key psychological level for Amazon. By the way, it was this time yesterday I told you all that Alibaba was going to go to 100, and it went up to 99.50. So I wasn't far off. So Amazon's just broke 100. 3% up on the day. Like $97, just over 97.20s yesterday. So Amazon's looking very bullish at the moment. Maybe that's on the back of the AMC rumor. Let's have a look at how AMC is reacting to Amazon moving up. Is it correlated? No, not yet. ARK, Tesla breaking highs, 195. Tesla having a nice moment. Why is the rest of the market not reacting in the same way? News, oh, it is. So the tech stocks, the Nasdaq's moving up. SPY not so much, S&P 500 not so much, Dow Jones not so much, Russell Index that kind of vomited at the open, but the tech stocks are all rallying. Shopify. Also moving on with the market, looks like. Mara broke highs. Well, Bitcoin's had a move back up to kind of over 28,000, hasn't it? After a bit of it did have a little bit of a pullback. I'm not saying that crypto. I'm still wary of the crypto market right now. I'm an idiot. So I'm just looking at EBS, and I should have spotted this a mile away. Okay, after the fact. Look at this. I got in here. Mind you saying that, I got in there. I got in up at the top here. It's the double top there, clear as you would like. The M pattern, you couldn't get a more clear M pattern there. I got in at the top, so that's kind of typical. Very, very bearish sentiment. Amazon is retracing a little bit. AMC making big now, going green on the day. So, get an increasing volume here. This might break out. This is basically, I believe this is on the back of the Amazon acquisition rumor. Micron had earnings last night, by the way, so Micron is breaking highs. There's not a lot of movement in terms of the low to mid cap stocks. Federal First Republic is moving up as well again. I think a lot of these banking stocks are now that the question marks have been removed in a lot of cases, not all, but in a lot of cases, I think you'll see a lot of these banking stocks start to return to the previous levels before the crash, which means it's going to take a few days, maybe even weeks. You'll see a lot of opportunity to the long side with some of these banking stocks. Schwab's not having a good time. It's just kind of ranging around kind of 54 at the moment. 57 is a key level for Schwab, though. Okay, SQ, that's moving up, despite its bad news from Hindenburg a couple of weeks ago. What else? What else is moving, guys? What else do you want to look at? Coinbase is having a good moment. I'm giving this 7 cents. 5.15 is where I'm getting it. 6 cents even. There we go. Micron breaking highs. Look at that. Had good earnings, did Micron actually. Good entry there would have been kind of 63.25, 63.20. Now it's a bit extended. I saw FRC moving up 8% already. So now we've got a little bit of a pullback that we can work with here. 64.50. Micron Technology had earnings last night, and the good thing is that the projections were quite good as well. SPY is just sideways, whereas the Nasdaq's actually taking off. Well, tech stocks are looking good. S&P 500 choppy sideways. Dow Jones and the Russell pretty much the same. So this is the pullback that you want. $90. IRT moving up, low volume. I see this back up and retest the highs. Current high of day 64.16. Ambi moving as well, is it? Just where did that come from? That was moving some time ago, wasn't it? A few weeks ago. I'll take a look at that for you in a moment. Thea. If this breaks new lows, I'll just get out. Right, I'll take a look at Ambi for you. Ambi part, emergency response, halted to the upside. Why? Does it have a catalyst? That's the question. Whilst it's halted, we can take a look. So this has got another minute, well, 30 seconds to resumption. So Ambi Pi emergency response. Not seeing any catalyst at all. Recent IPO from last month. Well, from the beginning of this month, actually. So this should resume anytime now. Double bottom on Viking. Looks like that's a 10-minute halt. So have a look at that at 56. Let's take another look at Marathon Digital. Yeah, I was looking for SEC filings and underneath, and those SEC filings I couldn't see anything that would get me excited about it. So sometimes it moves up because it's a relatively new stock to the market. Sometimes it moves up with just insider sentiment. Now this does have a history of already. Look at this on the daily, for example. It does have a history of started. This is where it started earlier in the year. It does have a history of moving up and then pulling back down, moving up, pulling back down. So it could go a couple of dollars up. So it's worth keeping an eye on. What I would keep an eye on is that the volume isn't huge. We've had two spikes in terms of the volume. The rest is very low. Watch the spreads. So that's what I was looking at from a resumption. If watch the spreads, they're probably extremely wide spreads if it's low volume. Just be careful with something like Ambipar. There's opportunity there, but you need to time it, otherwise you'll get bitten. Low liquidity stocks tend to be very dangerous to trade. What were the IPOs I was looking for today? A couple of IPOs as well, wasn't there? Look at it. I don't recall what they were. Oh, that's right. HLP and what was it? TBMCU. That's not started trading yet, but it's scheduled for today, and that's another one that's scheduled for. Oh, it has started trading. No trades though. So it's the quotes are right there, just nobody trading it right yet. Nothing gone through on the time and sell. The quotes are there, but there's no sales yet. So this is HLP. It's Cloud Holdings. That's not what I was looking for. It was Ambi, wasn't it? It was due to resume. So 46. So we've got a little over a minute left. Let's have a look at Marathon Digital again. Yeah, so that's it's pulling back a little bit now, kind of up there at 810s. You know what, Alistair? At the moment, you're probably better off sitting on your hands. Just wait for the right opportunity, otherwise just boredom trade. Well, I've taken a couple of boredom trades of it, and as per usual, when you take a boredom trade, it doesn't go your way. So stick to your strategy, be patient. This was one of the early movers this morning. Well, way below the VWAP now. So we should get a resumption about now. Oh, gap up. A little bit of volatility here. What's the spreads like here? So spreads are 37 cents. The spreads have narrowed now. Not getting filled though. Eventually got filled. Break of 11. Alt level 1196 to the upside, 979 to the down. Alt level now 1208. Spreads are huge. Oh, spreads are narrowing, so that's okay. I see it maintain above $11. It's 50 cents on the spreads again. So just be careful when you trade something like this. Do not go in big size because the spreads are wicked. They're at 50 cents on the spreads. The range is huge, but it doesn't cover the spreads at the moment. So the range is like 45 cents. Average true range is 45 cents. Spreads have narrowed to 20 cents now. So that's not too bad. About 30 cents. I'm not getting the feeling this is bullish. I'll stop there, just there you go. 17. It covered the cost of the transaction. Well, the thing is here, I was looking for a break up at $12, but it started to look a little bit weak. So there's a lot more risk involved, Neith, for sure. There's a lot more risk, but you've still got to watch the price action. You still want it to go in your favour. So what you're watching the price action, you're looking for sentiment, you're watching the volume profiles, you're watching the time and sales ticker, watching the colours on the time and sales ticker, you're looking for the level 2 as well in terms of where the sentiment is in terms of is it bullish or bearish. But the spreads are, you've got to factor in the spreads and the volatility. Right now the spreads are like 20 cents, 10-20 cents, which is better. Over 11.50 we might move back up. Thing is, when the spreads are so wide and the range is so volatile, using limit orders can be a bit of a hindrance. So sometimes it's better just to use market orders during a regular session. Yeah, I'm not convinced about that. I think that might be a bit of a bull trap, because if you look at that on the higher time frame, they're fuzzy. It's bouncing on the profit line, red-green line from yesterday's closing price. Well, we've got some green on the board. It's 17 bucks, but it's a little bit of green. A couple of pints out of that, depending on where I'm drinking. You like hammer candles? Hammer candles have got buying pressure. Kind of struggling to find anything else to try. I mean, I could have taken like a grand of profit there, but I was looking for the break of 12. So now we'll look on the 2 minutes on this one, and 11:37. So 11:40 is got potential. A Genius halted. I didn't look at Genius earlier, but that halted up a little while ago. To I wouldn't say it's Genius Group. I wouldn't say it's got good volume. It's poor relative volume. Genius Group over the last 3 months have been trading 20 million shares a day. It's less than a million. So why do I have two movers scanners side to side? One's tracking the movers, and one's tracking momentum. The time frames are different, Jaquina. One's for the day, and one's for the session. One's for the last 15 minutes. So that's why. Same way as you would have a chart, you'll be looking at your charts. You know, I'm looking at 1 minute, I'm looking at 5 minute, I'm looking at 2 minute. You're looking at multiple time frames. Yeah. EBS up at 925. Got key level there on EBS. Let's go back to EBS right now, where I've lost most of my money. Let's see if it's going to turn around. But a key level here at 35, 935. Ooh, Biomea. Nice. Bit of volume coming in here as well. We'll get continuing. This was a great one to trade yesterday. No, nobody corrected me on my Biomea. Biomea? I don't know. Biomea Fusion. Problem with Genius, as I'm watching this one right now, but the problem with Genius Group, as I say, is it's quite a. We're now 2 million, nearly 3 million shares traded. So we've increased the volume's increased over the last couple of minutes. So that's on Genius Group. It's still relatively low volume in comparison to what it's normally traded the last. It went without me. Still going without me. Oh God, damn. Just about to cancel those orders, and it filled them both on its way back. Take some off. Come on, fill the order. I'm going to cancel that. I'm going to go market. 50-cent trailing stop. Why not? This is nice. This is nice. We like this. There we go. Stop time. There we go. It only takes one stop. You saw it in action. It only takes one stop. Only takes one trade. Nice. Trailing stop. I put a 50-cent trailing stop. Probably could have got a bit more with that if I put a shorter trailing stop, but the spreads were like, it's currently the range is 74 cents. Spreads currently 20 cents ish. Let's see, can we get over $36 on this? It's a high of this candle. 78. Would I ever want to start my own trading firm? I do. It's I have my own little company. That's what I trade in. Nice one, Fuzzy. Good stuff. Glad you're profitable. So $0.75 area here now. Nice little consolidation. Do we get the continuation? That's the question. 38.04 is the halt up. We're ways from that, so I wouldn't worry about that. 31.13 is the halt down. So nice little flag formation. Viking is ripping up as well. Well, the movers from yesterday are starting to break out. Oscar's moving up. Viking's moving up. Biomia, whatever I called it yesterday. Yeah, but I don't think we'll do the pink cheats when it comes to the entertainment. Although the lobbing of the dwarfs, I think that could be quite interesting. It reminds me, I've not put my watch on. And I've not been lobbing my watches into the crowd either. Is it worth trading, Ronan? That's entirely up to you. Will I be trading it? No. Too many red flags for me. But it is entirely up to you. I just think it's too dangerous to trade. Personally, Silvergate Capital, they've already announced that they're going into liquidation. So if you trade it to the long side and they decide to liquidate, you could lose everything. If they trade it to the short side and you're in the position when they decide to liquidate, you could your equity could be tied up for weeks, months even, whilst the liquidation procedures go through. You might then either hit the pink sheets if someone acquires them, or you just get liquidated at a favourable position. So if you're short on Silvergate and it does liquidate, you might be in a good position. But if you go long on them, you could lose everything. Now the question is, if someone does buy them, and there's rumours of a unnamed crypto exchange potentially going to buy them, which could push the stock price up. So if you go short on it, you could end up in the hole to a sizable amount. So there's too many red flags with Silvergate for me. They're in a lot of trouble, and they won't be around this time next year. Simple as that. I really need to go to the bathroom, but this is just right in the area it's going to break up or break down. Now, trust me, if you can throw me around, you deserve more than a healthy paycheck. I mean, come on, I'm like £300. So to the uninitiated, that's over 20 stone. So people aren't going to be throwing me around like they throw the dwarves in Wolf of Wall Street. Trust me. People have tried in the past when I was on the rugby field. Didn't go well for them. And I'm talking some big men. Right, bear with me. If that breaks out, it breaks out. I'm not going to get FOMO over it. Okay. It depends. So it might not be with. When I was doing it between banks, it with CMEG, it usually takes about 3 to 5 business days on average for me. Now, it has taken as long as 21 days. The problem with that was not CMEG though. That was Bank of Ireland. So I don't use Bank of Ireland anymore. They were okay, fine. It wasn't a problem. But I withdrew from CMEG into Bank of Ireland, and this would have been last. I want to say October, but it's not October. It might have been September last year. Yeah, there you go. So it's usually for me it's about 3 to 5 business days. But it was 21 days, and I was having to chase it up, and it was at the Bank of Ireland. So I've switched, and I don't use Bank of Ireland now. Yes, I put money into my Bank of Ireland business account. That's fine. But what I do is I transfer it. I use Wise as the intermediary. So I'll transfer it into TransferWise or Wise, and then I'll transfer from Wise into my bank account, and it works out cheaper as well. Than just going from CMEG to Bank of Ireland. I don't think it is. Just check with your bank. So get into CMEG. They usually give you when you fill out the form and you're doing the withdrawal. I'm assuming it's for a withdrawal. Are you depositing or withdrawing, mate? Because if it's withdrawing, what you can do is you can get the receipt number and the transaction number from CMEG. They'll give you that, no problem. If you're depositing, then get the details from your bank, and it might be the bank. So then you deposit and send that transaction number or the reference number to CMEG customer service, and they will credit it. I mean, normally, if I was depositing, so when I did the small account, it was 2 days. It was like the day after. So I did it in the morning, and it was the day after it was credited. So that was back in January. Actually, I could have just transferred between accounts. Now I think about it. How stupid am I? Okay, so CBL International. Why? Let's have a look. CBL International. I'm not seeing any catalyst. Moving up nicely though. All right, okay. Be wary of this one. So there's a shelf there from last week. Yeah, be very careful with BANL. There's a shelf offering registered there last week for 3.3 million shares. So if this just be careful with it. Put your stops in place. Not saying don't trade it. I'm just saying be careful. I'm not seeing a news catalyst, but I am seeing a 424 registered last Thursday. Okay, so yes, you can .net. So it depends. If you are trading as a company, if you're trading in a limited company with CMEG, then you can't trade into. You won't be able. They won't let you transfer into a personal account, and vice versa. So if you're trading on a personal account, they won't let you transfer into the business account. So I've got both business and personal with Wise. And I transfer into my business Wise and transfer from my business Wise to my business bank account. It's not a problem. Wise for me, I use it from a number of different things, and it's like instant, almost instant in some cases. Ouch. So who was the people saying Genius is the one that's popping? Pump and dump if ever I saw one. So this normally trades, like I say, normally trades 20 million shares a day. So it's only 6 million. So I would say that spike up was, you know, always well dodgy. Yeah, well, I hope you made profits on it. I hope you took profits on your way and you didn't get stung on this this pullback. I've never had a problem either way, .net. Unlucky. Oh, lucky, because Murphy's Laws, you would have got in at the top for the break of 260 and it pulled back. But look, it is what it is. Okay, Biomea. I haven't a clue what to call you. Somebody help me out. What should I call it? Let me put some little horizontals on this. $36 is the key level. If it doesn't break 36, I'm not. 34 is a key level. So 34 is the support, 36 is the resistance, and we've got a $2 range to play with. Now on the 5 minute, we could have got a whole dollar here, almost. Yeah, probably a whole dollar. So yeah, 35 on the high. 85 cents, but what's the spread? 20 cents. That's not bad. If you, what am I talking about? You probably he's waffling to himself, and I do that all the time. I'm forced. It's unfortunate when you get someone like me. I am forced to converse with myself in order to be able to have a conversation with an intellectual equal. It's either that or take up religion and speak to the Almighty. That's all I'm saying. So there you go. But here, this is the 5 minute, and you can see here that we had the pullback, 5 minute pullback. Then we got this candle here. Didn't break any new highs, so that's not your entry. You got a high on this candle of, call it $35, $34.98 plus change, $34.90, just under $34.99. You got $35, the whole dollar break. you get it at $35 and it would have gone up to $35.85. The problem with that, and why you're waiting for the breakout here, the problem with that is the spreads are like 20 cents. So if you get in, you're hamstrung straight away, and then when you get out, you're hamstrung. So you're losing 40 cents. So you may be able to make 40 cents on it, which is not bad. I mean, if you can make 40 cents on a move every single day, you could be a wealthy man or woman. Biomia. Okay, I'll use that one from now. Okay, let's have a look at the top momentum stock right now. Why is this moving? It's moving big. Bridge Biopharmaceutical. They'll wait for me if it's a genuine move. I can do. I very often don't, because right now I've got a very a large account. So if I used 50% of my buying power, we're talking like $500,000 in the trade. So, you know, more than actually, because I'm over, at the moment, I'm like 320k equity position at the moment on this account. So I've got over $1 million worth of buying power. So I'm not going to go in with. If I was trading, let's say I was trading Nvidia, I might take a bigger size if it's trending and looking strong, and I can afford to do that. Yesterday I traded. What was the stock I traded yesterday? Alibaba. So Alibaba, I didn't have any leverage, but I was able to trade it, and I was able to take 2,000 shares with it. Well, actually 2,500, but because of my equity position. So Bridge Biopharma shares are trading higher following recent reports suggesting the company is attracting takeover interest. There's your pullback. It's a 94 million in the float, 19% short. So that could potentially, this could trigger a short squeeze. Might squeeze some shorts out here if we get a new high. Over $19. I've traded this one before, between $17 and $18, as you can see. The double top on Biomia. Just be careful on Biomia. If it gets to 34, short the hell out of it. It's that's not advice. Not I shouldn't say things like that. But I'm not a financial advisor. I'm just a fat guy on the internet with an opinion. Nice pullback there would have been, yeah. You didn't get much on it though. What's the spread like? Here, they're good spreads actually, you know, at 10 cents, 10, 15 cents. Range is 51 cents. So we've got, you know, good coverage on the between the range and the spreads. Pulling back a little bit though. If it breaks $18, wants to find support at the whole dollar. But it isn't doing. So you've got the VWAP there at kind of 1760s. So yeah, I'll come back to that. Ambi coming back? Doesn't look like it. Still underneath it. Rejected at the VWAP. Rejected at $11. So it needs to get over the VWAP first, and then I'd wait for the break of $11 personally. You've got your resistance level there now, $11. So it needs to get above that. So Biomia. Trying again. So, unless it's over 36, I'm not touching it. Well, how long's a piece of string? It depends. Can you take? What I would suggest is having a 5% target is, with the right knowledge, right strategy, and the right discipline. A 5% daily target is not unrealistic. So you start off with $2,000 account, as I did in January. I had 2,500, just under 2,500. And if you start with a $2,000 account, then you're looking for $100 day one. The day after you make it, so then you're like 2,100. So then now you're looking for $105. You steadily increase it. By the time you get, if you can get more than that on a given day, that's great. But what you don't do is swing for the fences. You're looking for $100, and you're looking for 5%. You don't have to make 5% per trade. You need to make 5% per day. So that's what another thing that I would caveat that a lot of people they and this is something that you need to get in your mind is you don't swing for the fences every single day. So if you've got a target that you're looking to hit, you might take 2 or 3 trades. You don't want to be taking 10, 20 trades a day, but that's over trading. You're going to lose money. You might take 2 or 3 trades, particularly, a small account. A trade a day is enough. You just saw me there. I was $5,000 down. I'm now $5,000 up. So go figure. If I'd been patient, and the reason I went $5,000 down is because I was impatient. Took a couple of boredom trades. There was nothing moving. So the first thing that had a sniff of some kind of volatility, I was on it like a rash, So if I waited for Biomea, then I would have. And there's a nice little descending resistance on Biomea there. So let's get a little rail line going here. The top here. So that's your breakout level now. Let's do another one of those down here. You'd be surprised how often these technicals, when they break out, they do break out. So just to put it into context, I am consistently profitable. I've had my best ever trading month this month in March. But I took my $2,500 account in January, and even trading as aggressively as I do, and although I've not been as aggressive on the small account, but even trading the way I do with the knowledge and the strategy that I have, I'm now a little over what, $37,000 in gross profit on the small account, a little over $30,000 equity position, because obviously you take your fees and charges and commissions and things out of that as well. So I've grown from $2,500 in 10 weeks. I've grown from $2,500 to $30,000 in terms of account size. Well, if you're looking at charting, I have TraderView open as well. I also have the charting from Benzinga, which is TraderView, by the way, or TradingView, not to be confused with TraderView. And that's you can't beat the charting on TradingView. It's a free platform if you want, but here's something that I found out, guys. Okay, so if you've got a VPN and you want to save some money on TradingView, I'm not saying you should, by the way. I'm just saying that this is something that I found out is that if you go to TradingView through a VPN and with a low economy, cheap economy, like let's say India, for example. As you go through India and you log into TradingView on a an anonymous tab in your browser, you'll find it's in rupees. it's about 10-15% cheaper than it is in dollars. So you get your credit card out and subscribe in rupees on your credit card, and you save yourself about 10-15% on TradingView. So I'm not saying you should. I'm just saying it's something that I looked into and it works, and it's the same thing for Spotify, Netflix, any other digital service. Get a VPN, log into that VPN on a anonymous browser with the VPN intact at that location, and subscribe. Do a digital subscription on your credit card, and you'll get a much cheaper package. It doesn't work with Benzinga, I looked. Unfortunately not. It doesn't work with Benzinga. Or Dash Trader for that matter. But most like leisure packages, digital, it works with TradingView. It works with a few other services as well. But so your Spotify, you can get a subscription for Spotify, which normally costs about $12, whatever it is, $15 for like $2. So, or equivalent. So I'm not saying you should. I'm just saying that some people can do that. Here we go. So this, get rid of this descending resistance, because that's default. It's actually flat topping. We're getting an ascending support into a flat top. So this flat top coiling here, when it breaks above 36, it's probably go up to 37.50. What else is moving up? Nothing. BBIO still moving up. CBL International, excuse me. So Bridge Bio is 13% up on the day. CBL International is never got above $10. Is this going to be the breakout? I'm not saying you should. I'm not providing advice. I'm giving information, education and information purposes only, or entertainment purposes only. That's the whole point. Education and entertainment purposes only. So I'm educating you that if you use a VPN to log in on an anonymous browser to one of these digital services in a region that is a much cheaper economy, you can make savings. And it's not just on Netflix or wherever. It's a lot of digital services have different prices in different regions. So I'm just saying it's something that's educational purposes only. I'm just saying that it's something that you can do. Not saying you should. You get no discounts for subscribing to Day Trade with Tony in India. That's all I'm saying. There you go. Just put a little stop buy order there for a potential breakout. I got filled. Nah, that's not what I want. I just bought instead of selling like an idiot. Right, do we get the move up? Don't panic, Tony. Press the buy button instead of the sell button. I've done that before now. Bear with me one moment, I'll answer that question. It's a good question. It's not so much what percentage of your equity you should be using in a trade or an entry. It's about how much you should be risking. And you should not be risking, rule of thumb, you shouldn't risk more than 3% of your equity on any single trade. Now you can go in 100% of your equity position. That doesn't mean that you're risking 100%. You can go in more than 100% of your equity position. If you've got leverage, if you're using your leverage, it means you're using more than 100% of your equity position anyway. So I'm just bloody idiot here. Let's see, is this going to work out in my favour? I've just made a mistake. It's probably not going to work out in my favour, but we'll see. It's my own fault. It was an error. So the idea is get green, stay green. So as far as I'm concerned, that's the key here. I've got my market order poised. It'll go up or down, absolutely. Thanks for that snippet of wonderful ingenuity there, Jack. It'll either go up or down. So I'm 5,500 realized right now. I'm just holding this. I'll keep 1,000. I'll stay green to 1,000. My own fault. That was an error on my part. Pushed the wrong button. I've set my actual buy order at 36.10. Just so you know, I got filled at 36.36. So I got a 26-cent slippage by placing a market stop order for entry. And that's why I like to use limit orders. So don't take a 2,000 share position, .NET superhero. That's probably what you're doing wrong, is you're trading too big. You don't want to be taking 2,000 shares. You want to take your 500 shares. So you need to factor in, you can't be taking maximum share size and having good risk management unless you've got, you know, you can be aggressive, but what you want to be doing is you want to be scaling scaling into a position. You don't enter for maximum share size. I mean, I've got a 90% buy 90% buying power button here, which is fine for me, but that's usually a kind of my momentum button. It's like, okay, get me in quick with maximum size, and doesn't mean I'm going to be risking that amount. And usually I'm ready to put either a stop in place straight away, or yeah, you're just teasing me now. I should have got out for a grand loss then. Got up to 35.8 on the ask, which got me caught between the spreads. I should have got out then, or at least sized down at that point. Just take a hit. You make a mistake, pay for it. Why risk paying more than you have to? So if we get move up here, it might be okay. Might not. It might move down like that. Well, where did you think you were going to find me? I'm not hiding in the back streets. Well, you could find me on Twitch or Twitter or TikTok or ShareVision or YouTube or Facebook or Instagram. I'm streaming live on all of those right now. Let's see. Come on, guys. I need you to all pray this goes in my favour, considering it was an error. Well, the dog is, so as of tomorrow, I think I'm going to do a full day stream tomorrow. I'll probably take a couple of breaks, obviously. I'll probably do a full day stream tomorrow. Not like I've got nothing on tomorrow to stop that. Find me in Asda's. No, you're not finding me in Asda's. Maybe Super Quinn. No, not even Super Quinn. That's defunct now. Super Value or Tesco's maybe, but not Asda's. I'm in Ireland, not the UK. $4,500 is my stop. I've not got a stop in place. I've got my finger on the sell button, market sell. No, I've got it's all on the same system. So I'm using Restreambot to stream to most of them, but I've got the TikTok stream through TikTok Studio, and I'm filming Instagram from my phone. So it's 3 different streams going out, but one is multi-streaming. I'll take the 500. I'll take the hit for $500. If it moves and breaks $36 again, look, that's no Waitrose here, Alex. You should know that. Done stores. Although Mrs. H thinks that she's posh, but she's not. She's designs of being Waitrose. But look. That was patience. That was a lesson in patience. So that was what can happen if you get faked out. That was a fake out breakout, but the fact that I actually got slippage on the entry left me wanting more, getting greedy on the exit. So I could have got out here. The high of that was I could have got 15 cents. I was looking for more than that. It actually 36.50. I probably would have taken some profits. But I got in at, I set my order at 36.10, and I got filled at bloody 36.36. So 26 cents slippage on the entry, which left me with only 14 cents to oh no, 36.68 is the high of day. The commissions are, I disagree. I don't think CMEG commissions are high. They've increased over the last while, but it's inertia that stopped me moving, if I'm being honest. I started with a small account like you guys, and PD2 rule was an issue. It's not anymore. But traded with Interactive, the leverage was an issue to start off with. They only give up to 4 times leverage. So 6 times leverage plus, and I don't think the commissions were that bad. The commissions per fill since the beginning of this year is a bit of an issue, but that's stopped now. As of the end of February, it's now, there's a maximum on that. So, and I pay more than that anyway. So. Light speed. I've had mixed reports from Lightspeed, but mostly good. So I'll probably look at Lightspeed again, actually, because the charting's better on Lightspeed. Yeah, the commissions are high for small, but that's the same anywhere. That's the same anywhere. If you're a small account, you're going to get hit with the commissions. So that's why you need to be factoring that as part of your risk. It doesn't matter which broker you go to. If you go to a free commission broker, you're going to get hit with the spreads on a small account. It's just one of those things that you've got to accept. The bigger the size, the bigger the profits, the less the commissions are an issue. So I mean, if I go back to how much I've earned just this month, I'm paying substantial 5 figures on my commissions. I might take another look at it then. No, I haven't .net. Right, what else is moving? So I just wasted the last 20 minutes just in that consolidation period because of the mistake that I made. But that's like, as it turns out, me actually buying instead of selling wasn't a bad thing. Because I only lost like just under $500 on that in the end. All right. Yeah, Ambi, not really doing anything. Let's have a look at. $10. Let's have a look at Viking. I'm sure I looked at Viking earlier. Why is it not on the list? double top up here. So let's get the 1540 twice. That's your double top there. No, I think CMEG fees are actually the what hits me harder than commissions is actually ECN fees, because I take a bigger size, so I get it's charged per share. I think the commissions are actually reasonable. It's actually cheaper for with CMEG than it is Interactive. Interactive is more expensive than CMEG. In fact, the majority of brokers I've looked at are more expensive than CMEG or worse service. So the fact that I've had good service from them as well, you know, it counts a lot for, you know, for gaining the loyalty. Because they're selling your data need. It's payment for order flow, which is illegal in a lot of European countries, which is why they don't serve a lot of European countries. So if you get into zero commission broker, there's two ways that they're making money. They're either making money on the spreads, in which case you're getting wider spreads and you're getting poorer fills. They control the spreads and they control the fills. Or it's payment for order flow, and they're making money at the back end via the route. So in many cases, it's both. So if there's no such thing as a free lunch, there's no such thing as a zero commission broker. If it's too good to be true, it sounds too good to be true, it is too good to be true. If it quacks like a duck, waggles like a duck, and it swims on water, it's a bloody duck. Come on. Okay? So zero commission brokers are not what you think they are. You might think you're getting a good deal, but you're not getting any better deal. Your fills are going to be worse, slower and fills, wider spreads. More often than not, they're getting paid for payment for order flow. Now, in a lot of European countries, that's illegal, like the Netherlands, for example. So they can't do payment for order flow. This is why we don't have the options in Europe that they have in North America for zero commission brokers, that's just the way it is. Okay. Robinhood does it that way. TD Ameritrade do it that way. Webull do it that way. The majority of brokers that are offering zero commissions are doing it via the payment for order flow. Even CMEG have a zero commission version, which is payment for order flow. You've got Interactive brokers. I just had a brain fart. Interactive brokers have a zero commission offering, which is payment for order flow as well. Majority of the ones where it's not a payment for order flow, it's because they're controlling the spreads and they're making money on the spreads. They will not give you a direct access platform and zero commissions. Because if you're direct access platform, you're in control of the route. I can choose who to send my order to, and also on the back of that, I'm getting fast and tight spread, fast execution, fast fills, and tight spreads. You're not going to get a direct access platform on a zero commission broker. CMEG is available for US residents. It's an offshore broker. You can trade with CMEG if you're in the US. It's one of the because they're an offshore broker. It's one of the ways to get around the PDT rule. Offshore brokerage. Right. Question, guys. Do I go for another half an hour, or do I walk the dog? I'll switch that. We're at the top of the hour, so do I go for another half an hour, or do I walk the dog? Another 30. Okay, well, we'll do another 30 on one condition. What's the like count at the moment on TikTok? Let me see what we're doing on the old Tuber View. Guys, what are you doing? There's 90 people watching watching on YouTube, and I've only got 10 likes. So I'll stick around for another half an hour if I can get 25 likes. Smash that thumbs up button, guys. 25 likes on YouTube, or at least 3,000 on TikTok. I don't know what we've got at the moment. Oh, come on. 607 likes on TikTok. Everybody gets spamming me the like button. They hit that like button like 20 times, 200 times, 50 times, whatever. Just tap your screen a whole bunch of times and get that like count up. Okay? So we'll get 25 likes on YouTube and just get that like count up. You're doing me a disservice. I'm giving you gold, and what you're doing, you're ignoring me. It's an insult, is what it is. So get that like count up, and we'll get the like count up, and I'll stick around for another half an hour. You've got 5 minutes to get the like count up. So if it gets to, I'll be checking the numbers again at 5 past. And if the like count we haven't got the like count up, I'll be finishing at 5 past. So 5 minutes to get that like count up. Okay, there you go. So 2,500. Get to 3,000. I can feed the dog. And that's always worth another 500. There you go. Cheers, guys. I'll feed the dog. Thank you, TikTok. So let me know when we get to 25 likes on the old tickety tockety. This stream is sponsored by Duck Fillets. You can't have that one. That's two. That's a double. Right, you've got to work for it. You've got to stand up for it. Not paying you to be snore and be lazy. Come on. There you go. Good girl. I can expect about 40 to 60% like interaction from viewership, which is why I need to prompt you to get that like count up, you know. Yeah, so if you're not liking the channel, what the hell are you doing here? You know, go and find a channel you do like. You're wasting your time. If you are liking the channel, if you are liking my content, let me know. If there's something that you don't like, something you do like, something you'd like to see, let me know. I'm just a dog feeder on the internet. Absolutely. Come around here. You're not getting any more. Where are you? That's cheeky. I know. That's why you're going around there. I've only just worked today. That's where I keep the ducks. You can have that later. Okay. So Viking went up. So let's did the double top and came back down. Let's have a look at what else is moving. We'd like the dog to see a few words. What? Do you want to kind of repeat that, but in English, please, Clatty? Fidelity, is that zero commission? I don't think that's. Pretty sure Fidelity's a commission broker. But you can find out and just Google. Say a few words. Yeah, well, she does occasionally. She's quiet enough. You've heard it snoring. That's good enough. Good enough for me. Ambi not doing anything. Biomea's still retained those gains. Biomea. That's BBIO. So we're still within this range. Sometimes you get faked out, and that's what happened there. But look, we're still within the $2 range at the moment. 0 in the US, then they're probably charging, it's probably the spreads. So if it's 0 in the US, if it's not commission if it's not payment for order flow, they're taking commissions they're taking the price of your commissions from the spreads. It's as simple as that. So every time, and it'll be per share, obviously. So you'll find fractional, it'll be kind of fractional commissions as opposed to, you know, up front. So they might have, a lot of brokers will charge you, say, a fraction of a penny per share. So they might charge you like 3/10 of a penny per share. So if it's 3/10 of a penny, on the spreads, you won't see it. If the spreads are a penny, you won't see it. So they add 3/10 to the spread. They're making their commissions that way, covertly. Just think of it that way, okay? Because when it's rounded, it's still going to look like a penny. 1.3 cents on the spread is it just, when it's rounded up to the nearest cent, it looks like 1 cent on the system. So they get away with it that way. So like 3.3 cents on the share for the spreads, they're making the commissions. Yeah, Oscar and Biomia are looking very similar. So this is Biomia, and Oscar is here. So looking very similar. They just moved up and they're in a kind of a range. So let's go back to Biomia. Biomia. Oh, they are different. They're substantially different. On the 2 minute, they look a little bit similar, but on the 1 minute, there's significant differences. Yeah. So what I would say with Oscar right now is what I think that's VT. That's Viking. This is Oscar. It's bounced on the VWAP a couple of times already. So $6 whole dollar support VWAP. Let's just do a quick horizontal here at $6 and let's see historically on the higher time frames, what are we looking at? Let's look at it on the daily. So $6 was a key level pre-market. If we look at this, yeah, it's $6. Not really done much there on the kind of daily. On the 60 minute, let's look at it on the, yeah, it's kind of a support level here. Yeah, so $6 is a key level on the daily. Always worth drawing it what you think is a key level and zoom out, and it will tell you is it support there, resistance. So $6 is key. So watch, and then you can obviously follow that up with the what's going on the level 2 at $6. Do we have a buy shelf at $6, or what's the scenario there? I hope he does. Stealth commissions, Jack. Absolutely, that's what it is. Stealth commissions. So yeah, let's have a quick review on the old Tuber view. Why am I seeing only 10 likes on? Oh, that's the wrong one. 25 likes. That's okay. I'll live with that. Okay, guys. So $6 support. So what we're looking for here, maybe a move back up. You see the $6 confluence of support there with the VWAP, full dollar VWAP, all at the same place. It's been down this level before. If it doesn't hold, you can pretty much guarantee it's pretty much done there. So we've got volatility seems to have dried up a little bit. We're 5k up. We're not far off goal. Any small account trades today? No, not yet. I've just not seen anything to. Have I taken any small account trades today? I don't think so. Let's switch over to the small account. No, nothing today so far. There was nothing to trade to start off with. So I took a couple of boredom trades, and then Biomea, whatever, started to move. So that's the only thing we've traded. The last trade I've taken was Biomea. That's going to annoy people. Me keep saying that in different ways every time. This is Shift Technologies. I just saw it on the scanners, but nah. Well, I was a day late, guys. For those of you that were here yesterday, I was a day late. Alibaba is now over $100. So I told you yesterday, it went up to $99.50 yesterday, and I told you it was going to go to. I'm not saying I'm the best trader on the internet. Top 3, I must be top 3. But look, I told you yesterday that Alibaba was going up to $100. I felt it's definitely going up to $100. It didn't go up to $100. I was wrong on that, but it was very close, $99.50. So yesterday it went from kind of $86 pre-market up to $99.50. And I think I called it out pre-market when it was about $92, $93. So it's now over $100. Yeah, cheers, Alistair. Cheers, Alistair. Oh, somebody was asking. Who was it? Okay, so Jaquina, I'm sorry if I'm butchering your name, I apologize, but Jaquina, it costs to get access to the course at the moment. It works out about, well, it's actually cheap. The longer you subscribe, you go for a 3-month, which I would recommend. It's a little over $300. It's $120 plus. It's about $150. So it's $120 plus tax. So that's how much the course costs. It's negligible. If you can't afford $120 on a monthly basis, or $150 on a monthly basis, day trade is probably not for you. It's probably not aimed for you. So just before you come after me for that, I will be putting a package together based on the feedback today. In this community, I'm going to put a package together where you can get the simulator, Benzinga, and the course in one package, and that's what I'm going to do. So yeah, 120 plus tax, US dollars. So check it out. The link's in the description. So if you go into the description on YouTube, you'll find the link there. It's a monthly subscription, so if you want it forever, then stick around. But you also get access to the private Discord where I'm live trading daily as well. You get the whole community. You get mentorship from myself. There's a whole bunch. You get access to my trading library. All the books in ebook format that I use to learn how to trade. So yeah. You get 30 days access for 120 bucks. You can go for free. Most people stick around for at least 3 months. Why? Because it's going to take that long for to absorb the knowledge and then start practicing. Part of the course is whilst I've got you, I may as well show you, hadn't I? Okay, so let's go this way by this route. And so this is my Benzinga, by the way. So before I actually do anything further, let me just pull up the chat so I can talk to you whilst I'm in the chat. So this is my Benzinga, and I'll come to that in a second. What I'll do is I'll give you full report. Now, if you go into my link tree, now if you're on TikTok, the link is. Here is my link tree. The link is in my profile on TikTok. So click my face. Just give my face a bashing. I know that there's quite a few of you that would. Alistair, I'm talking to you. Give my face a bash, and it'll bring you through to my link tree. Now, this is my link tree. Now, if you're watching on YouTube, all these links are in the description of this live session, this video, at the same time, in the same order, okay? With the exception of these icons at the top. Now, if you want to get to these icons, you follow the link that's in the top left, which will bring you to this page. You've got my email. You can reach out to me directly via email. You've got the Facebook. You've got Twitter, Instagram. You can DM me on Instagram. If you want to watch on Twitch, YouTube, TikTok. What I've not put up here is Share Vision. I probably should put an icon up there for Share Vision as well. But all of my socials and contact details are there. You can get that. Now, you were asking about the course, Jiquinya. So this is the course, okay? Now, the first lesson you can watch it for free on YouTube. It's kind of it's like crack. The first hit's always free, okay? So you can get the first lesson for free. You can watch it on YouTube. So this is the course, and you get the full syllabus, introduction to trading. It's a little over an hour. It's an hour's lecture. Gives you a good background into what day trading is, what my objectives are, etc., etc. Some of the basics of what trading actually is, and trading the stock market. Then probably the most important lesson is an hour and a half talking about risk management, how to manage your risk, why it's important, and a whole session devoted to risk management. Connected to risk management is stock selection. Now, I take big risks. I am an aggressive trader. I'm less risk averse than a lot of people would be. If you've got a smaller account, like most traders, in fact, the priority should be to protect your equity rather than to make big gains. Day trading should be boring. You should be making a couple of $100 at a time. That's it. You shouldn't be swinging for the fences, looking for big gains, trying to make as much money as possible every single time. Stock selection is part of that. So stock selection and what you're looking to get across and choose a stock to trade. What I'm looking for, what I do. There's exams after each chapter as well to make sure that you're paying attention and that you're actually absorbing it. You've got setting up your charts. So what you're looking for, daily charts, time frames, what are triggers, what are windows of opportunity, etc., etc. Then you've got the intraday chart patterns that I'm using to trade. Then trading strategies, the likes of the gap and go, the likes of the bottom bounce, or reversal strategies, momentum strategies, which is what I've been using most of late. Bull market, gap and goes every single day. We're not seeing many gap and goes lately, but gap and go is probably one of the most profitable strategies. Momentum coming second. I probably use momentum strategy every single day. Stock scanning. So what am I talking about with stock scanning? So I use Benzinga. Now you can use the same principles with trade ideas, FinViz, or anything else. I use Benzinga. I recommend Benzinga. So stock scanning, and let's just go back to Benzinga. My platform here, Benzinga. I've got two widgets popped out. which the reason they popped out is purely for the stream, because these are the same two widgets that I've got in here. This is my window here. This is Benzinga. If you're not using Benzinga, check it out. I really do recommend it. It's a phenomenal piece of kit. It's a phenomenal platform. It's a web-based platform. I've got this set up. I've got 5 widgets in my desktop here, but I can switch on the squawk functionality here as well. I'll get audible alerts. I can look at the chart, for example. I can open a chart window here, and it will give me a trading view chart that I can use here. For example, it opens automatically up with the SPY, but I can put it on whatever time frame. I can make it bigger. I can start doing drawings on it and do a little arrow there, whatever it is. So this is TradingView in Benzinga. So if you've got a trade, I'm just talking about TradingView, how you can get it cheaper by using a VPN and subscribing in some cheap location, but you can get it in Benzinga. So Benzinga is fantastic. There's all kinds of things in Benzinga that you can look at. If you look at your calendar, for example, in the workspace here, I just opened a new window, but you can get it in the workspace. So straight away, open the calendar, and it's got, okay, who's got earnings today? And it tells me exactly who's got earnings, after market, before market, when it's got earnings, etc., etc. So that I can look at, okay, are there any IPOs today? And I've already told you that there are IPOs. This is where I get my information from. So HLP is currently trading at 12% down, 349. TBMCU is listed for 10. It's not started trading yet, but that's the same company, but it's trading under TBMCU. So that's Trailblazer Merger Acquisition. It's a SPAC company. Okay, I can look at economic data. Okay, this is every single day. Okay, well, what's happening today? So we had the oil data, energy data coming in. That came in at 10:30, like an hour ago. Home sales data index. So HSI, mortgage data, all of this. You can even look at it on multiple countries, UK, Italy, whatever. It's fantastic. This is Benzinga. It really is a wonderful tool. Let's go back to the course that we were talking about for you guys. So then we're talking about trade management, the psychological aspect. Somebody was asking me earlier, I get into a loss, I take a hit. How do I keep my cool? How do I not let it affect me? Well, the truth is, it does affect me. But you've got to recover from it. So it's not so much how do you stop it from affecting you. It's when it does affect you, recognize that you're getting emotional about something. So right then, I got faked out for that break of 36 on Biomea, and I accidentally hit the buy instead of the sell button as it pulled back. Did I let that worry me? First and foremost, was like, okay, I've made a mistake. It's now pulling up. I'm in for twice the size, but I'm just going to hold this. If it moves back up, it might be a blessing in disguise, and that's as it turned out. That's what happened. I was able to get out for a small loss. The psychological aspect is probably the biggest obstacle you're going to overcome when you're learning how to trade. Huge issues around the psychological element. Okay, so just bear that in mind. Back to the link tree. Oh, so yeah. So I'll finish this off. We've got advanced technical indicators, options, introduction to options. You've got swing trading course, a little swing trading course I put together as well. Because what you want to do with your gains from day trading, you want to still have them make gains, but you want to be doing it a little bit less risky. So day trading is probably the riskiest way of trading. Swing trading and then actually investing, value investing. My library of ebook reading material, so the library that I use to learn how to trade. Let's say it's in Ireland where I'm based, so based on the location, it's $146. It might be £120, it might be $130 US. So it'll differ from wherever you are. In It might be cheaper. It actually might be cheaper in India. So the tax might be cheaper in India. I don't know. But it's difference is the tax base. Okay. So check out Benzinga. Just gone through Benzinga. Check it out for 14 days for free. You don't need a credit card number or anything like that. Just to trial it. Go and check it out. If you do want to trade with it, use my discount code. TradingView is the charting platform. You just saw me use the Benzinga version of TradingView. Dash Trader is the platform I'm trading on. TraderView, not to be confused with TradingView. TraderView is the journal. So I've got my journal open here already. So this is TraderView. You can see here, I've got this log. This is filtered for the month. So I know I did 15K, but I did 2K on the small account as well. So if I look at where we're doing in March at the moment, 264K is a really, really good month. This is a brilliant month, in fact. Let's look at this day. Power hour trades are not going my way this month. Maybe I shouldn't be trading power hour. I'm losing money in power hour. So at the moment, and I'm actually making money on Mondays now. Let's have a look at for the year. I still think I'm losing money on Mondays. So for the year, I'm losing money on Mondays still. Hours of the day, I'm actually making money in power hour. Okay, so just in March, I'm losing money in power hour. Yeah, the rest of the time, I'm making money Mondays. I need to take a day off. I can even look at this for example. If I look at the beginning from the beginning of last year, look at the details. Mondays my worst performing for more than 2 years of data. Mondays is my worst performing day, and this is something that you want to be taken into account. Okay, hours of the day. May last year was not good for me. I've not had May this year, obviously, but I'm looking at where I'm actually making money. I can even extend that even further and look at. So we're looking at 2 whole years of data instead of just 1 year of data, and yeah, Mondays not good for me. So I need to stop trading on Mondays. I guess it's the worst day of the week for me to trade. But there you go. I'm making less money on Mondays than anything else. So yeah, check it out. Okay, let's go back to the charts and why is that looking weird? That's better. We've got the scanners back and we're all good to go. Okay. That's as long as you're doing it, Alberto. If you use my code, that will be your subscription price for the full duration. So you can go for a 3-month, you can go for a 12-month, you can go month to month, and you'll get 35% off. If you subscribe in with that discount code, you'll get 35% off, and that will be your renewal price as well. 35% off that every single time. So it's worthwhile doing that. Okay, so Baba, over $100 as I predicted. I probably should have swung it at the open yesterday when it was like 94. Maybe buy some options or something the day before. Easy said now after the fact. You know what? I've not bought any options for this year, so I don't think I'll have to double check. I don't think I bought any options this year at all. I need to look into it again. Right. NIR. That's the mover right now. No volume. Nothing worth trading. I need to take the dog for a walk because I've got a tutorial with one of the students at 12 market time. So that's in half an hour. So I need to take the dog for a quick walk, and I will wrap up the stream now at the bottom of the hour. Dog for a quick walk, so I can be back in time for my tutorial at the top of the hour. In the meantime, I will be back tomorrow, and I'll be doing a longer stream tomorrow in three parts. So come join me tomorrow, an hour before the market opens. So that'll be 8:30 East Coast New York. It's 12:30 Irish summertime or British summertime or ICT, whatever. Come join me then, and we'll do it all over again. In the meantime, stay profitable. We're green, we're staying green, and if something moves, I might just, if you're not subscribed already, hit the notification. But if you're subscribed already, fine, hit the notification bell on YouTube. Make sure you're subscribed on or following me on TikTok. I might come back and do a Power Hour stream later. We'll see. I'm in a good mood, so we might come back and do a Power Hour stream. I'll see you guys tomorrow if I don't. Okay, catch you later.